Hi, I'm Jeff Hirsch. I'm here at the Money Show with Mike Larson. He's the senior analyst at Weiss Ratings for the Safe Money Report. And you've been talking about what investors are doing wrong. I mean, it's a different market environment right now. What are investors doing wrong?
Sure. Well, we've been in this sort of QE inflated market environment where you could buy almost anything, just buy an index fund and call it a day, and that has worked or has been working from about 2009 through early 2018. But if you look at what happened with the explosion of volatility in 2018 in January, February timeframe, you look at some of the underperformance by certain sectors like financials. There's these things that I'm starting to see that make me more conservative. Yeah, red flags. I mean, we've all gotten used to just this never-ending bull market, whereas I think you have to be a lot more selective now. The market leadership is starting to change,
right.
And some of these things that are going on just signal that, it doesn't have to mean a full-fledged bear market's breaking out tomorrow, but it does mean that you want to be raising a little more cash, getting more conservative with your investments, and otherwise dialing down your exposure a little bit.
And so what is it people are doing wrong? I mean, just not being conservative enough, or there are specific things that you're seeing investors do that they could really change their direction?
Yeah, I think, again, it goes back to just expecting this QE forever environment to always be there as a backstop. I think that's one mistake that investors are making. They're focusing a little too much on, the stocks that are always getting the news, what I call the overhyped tech stocks. What's Amazon doing? What's Facebook doing?
So many of the stocks
Apple
out there.
Exactly. I mean, we've got, in our coverage universe at Weiss Ratings, we have 9,300 plus stocks that we follow and that our system rates. So there's a lot going on. There's a lot of other names out there.
Pretty good dividend yields out there. There's some great, valuations and revenue growth, earnings growth stories.
And I think that dividend yield is going to become more important over time if we're getting into a more conservative environment. Things like utilities, which people have been sort of throwing out in exchange for the FANG stocks, even some REITs, storage REITs, for example. Those are the kinds of niche plays that I think really have more potential. They've got the yield support.
A lot more yield you're telling people.
Exactly.
So the thing they're doing wrong, investors are doing wrong, they're not getting enough yield.
Not getting enough yield.
For this conservative, more precarious, sideways market potential, some downdrafts.
Yeah, exactly, and that's a change from what we've grown used to.
Sure.
I mean, a year or two ago, it was all FANG all the time. I think that kind of environment's changing now.
Very well. Thank you very much. Thank you for joining us, and thank you, Mike.
Thank you.